So we're here to trade the news, huh? Equity market open. Philly Fed came out pretty good. 1.9%, that's good. Initial jobless claims as expected. But South Africa raised interest rates. Wow. I'm still just blown away by that. That's pretty cool, man. Front running the Fed. I'm trying to get out in front of the Fed. That's interesting. Right? Because what happens? The dollar gets strong. Americans start importing more. They start buying things from foreigners. They start buying things from South Africa. And because South African products would seem relatively cheaper, and a bunch of money goes to South Africa and inflation rises, but keeps inflation low in the United States because we're buying cheaper stuff from foreigners. So we're exporting our inflation to South Africa, and South Africa doesn't want it. They're like, send your money somewhere else. It's kind of a topsy-turvy world, but that's the one we live in. That's the planet you chose to colonize, and here we are. So about 10 minutes to the New York stock market open. Let's be really professional about this.
Just know we've seen the move lower in U.S. Treasury yields, particularly at the back.
Let me introduce myself. My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. We offer you access to Forex, energies, metals, indices, and binary options. But the greatest thing about this is we're the only broker in the world that actually loves you. Think about it. We care. I'm here every single day, hour after hour after hour, sharing my deepest thoughts, my innermost concerns, the good, the bad, the ugly. I sing, I dance, I cry when needed. But I want you to succeed. And then once you're a huge success, maybe you'll choose Traders Way as your broker, and we'll be trading partners for years and years to come. That's pretty cool, isn't it? And I usually, I never tell you what to do. Just a heads up. I show you the charts. We go over the technicals, bullish and bearish. I give you an outlook fundamentally what it should all mean. But there are times when the market's bullish even though the fundamentals are bearish. That's for you to decide. But you should never take advice from trading advice from a broker. Have you ever got a phone call from a broker? It calls you up and says, hey man, I want to show you the ADX and how you can make millions of dollars trading with the ADX. And you're like, dude, if you knew how to make millions of dollars trading with the ADX, why do you make $6 an hour on doing phone sales for your stupid broker? Right? Like, well, why don't you do it? I don't have an answer for that in my script, sir. So anyways, I never tell you what to do. I would never belittle you that way. But we can certainly discuss it, right? We can certainly discuss the markets. How do you feel about this? How do you feel about that? And sometimes I won't cover a currency pair you asked me to, but I'll tell you why. And I'll say, I'm both fundamentally bearish on those two currency pairs, those two currencies you asked me to review in that pair. And, let me tell you why I wouldn't want to even consider it. And I'll discuss that, right? But, I think most of the time you can figure out what I'm thinking. But I'll never tell you should buy this and you should sell that. Because at the end of the day, I'm trying to make my own decisions too, right? Sometimes I'm right, sometimes I'm wrong. That's how it goes. So anyways, this is the SP 500, a broad index of 500 stocks in the United States. And if the SP 500 rallies, perhaps some foreigners are buying that too. What happens when the foreigners want to buy into the U.S. stock market? Do we accept foreign currency? Will the S&P 500, will the Chicago Board of Trade accept peso and South African rand even if it's appreciating in value? Will they accept rand? Do they accept Canadian dollars or Australian dollars or Kiwi dollars? No. Greenbacks, baby. They only want USD. So if you're a foreigner and you want to get in on an uptrend in the S&P 500, you're going to need to buy some US dollars, and that could lead to dollar strength. And we have seen a strong positive correlation, is one way of saying it. We have seen a strong positive correlation as of late. When the S&P 500 goes up, the euro or the US dollar tends to go up as well, which means the euro dollar would tend to fall. But right now that ain't happening. In fact, right now the USD is ripper weak. So we'll wait that out. We'll listen to it. So for this event, I work with TradeTheNews.com. I've been using or leveraging or utilizing their service for probably 8 years, maybe more, but about 8 years. I've known them since they were a little startup, and they help you get the news faster than anybody else. In fact, it's a crew, right? A team that watches. I can imagine they have a room with televisions on, like from all around the world. They must have a room, like a war room. Like I have 18 screens of currency charts. They probably have 18 screens of news feeds coming in, and they watch everything for you. And it's amazing. Like just a few minutes ago, they're like, "Oh, Abe, Prime Minister Abe might release a stronger statement at the Asian summit in Malaysia." I'm like, "What? Where'd that come from?" Right? Oh, well, they're watching the news in Japan. I'm like, "Oh, that's cool." So they get things like the Philly Fed. They get it as fast as it can possibly come out, which is really good. But the other thing that they have is they have a couple of guys sitting at the Chicago Board of Trade reading hand signals of the floor traders. And so we can actually, like I think it was yesterday I did a webinar like this, and we heard a trader from a broker in Boston, Boston Technologies I think it is, or the parent of it. And so this floor trader goes, buy, 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 buy. And he buys 60 cars, what they call like 60 large contracts, in about 15 seconds. Because he had to do a couple. He bought 40, and then he bought 20 more, and he was doing them in fulls and halves and stuff. So anyways, he accumulates this position, and we see it in real time. I calculated out. It's like $40 million that he buys in about 15 seconds. He buys worth of the S&P 500. We hear it, we discuss it, I calculate it, and 2 minutes later, the candles on the S&P 500 chart turn green and goes up, 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 and we could tell you who actually did it. How cool is that? Okay, so anyways, we'll just listen to them for a while. If you're interested in that kind of stuff, you should contact TradeTheNews.com. Let them know Wayne McDonald sent you, because they only take institutional clients. But if you give them the, do the name dropping thing, they may let you in. You still have to pay lots of money for it, but it's probably worth it. So we can drop into a 1 minute. And then what you should do now is identify support and resistance. But let me put on the news. Again, this is TradeTheNews.com. Live from the Chicago Board of Trade.
79 even, 79 half. Early call. We're in the 20 handle. I think. Jobless claims spot on this morning. 271. Survey 271. 10 seconds.
Can you guys hear okay?
78 half, 79 even. 5, 4, 3, 2, 1. And we're open. And I have Smith buys 38. Boston sold 5. Make it 8. He paid 30 on 8.
I'm going to use this chart.
Boston sold maybe 15 cars getting a small breakdown. Very quiet open this morning. 79 half. 80 even.
I'll probably sell it up here.
9 even, 9 half. 79 even, 79 half.
Let's try to find a buy zone.
9 even, 9 half.
Buy zone's going to be down here.
9 half bid at 0 even.
Maybe that week.
Boston
There's a
bought
cluster.
back 2.
Let me zoom in.
Boston XFA broker. 9 half bid, 9 half, 980.
Can you see the cluster?
Sold
Sort of a
15,
weekly
bought 2.
at 76. The daily it's 73. The 382 it's 71 and a half.
12.
And then the roll reversal at 70.
Goldman buys
So
27,
70 to 75 looks
9
like the
even, 9
buy
half.
zone.
79 even bid and a half.
So I'll go back into the 1 minute.
Hey, I don't think I did. At 9 even. It's done now. 78 half, 79 even. 8 half, 9 even.
Can you guys hear it okay? Please let me know.
79 even. We don't like them. 8 half, 9 even.
I believe you're getting the sound right off the sound card, so I don't have to hold my
We don't
mic
like 'em.
to
8 half,
my
9 even.
headset.
We either like you or we don't. We don't like it. 9 even, 9 half. 79 even, 79 half.
Bouncing off the pivot.
9 even, 9 half. Goldman's at 9 even, paid 930 on 10. At 9 even, 870 bid at 9. 8 half, 9 even. 78 half, 79 even. 8 half, 9 even. 9 even bid, 9 even, 9 half. 79 even, 79 half. 9
Hello?
Even, 9 half.
Is sound off or what? Can you guys
9
hear it?
even, 8 half, 9 even, 9 even, 9 half. At 9 even, 870 bid at 9. 78, 70 bid at 79 even, 870 bid at 9. 9 even, 9 half. 79 even bid at a half. 9 even, 9 half. 9 half bid at 0 even. 79 half bid at 80 even. Opening range 20, 79, 30, 20, 79 even.
No, I'll just assume there's a lag in the chat, but my chat's not updating. Oh, yeah, there must be a huge lag, yeah.
79 even, 8 half bid at 9.
Oh, good. Everybody's happy. Everything's clear. Good. Well, then why don't you ask questions? Let's leave it up to that.
9 half bid.
I'll
at
answer
0
questions here on in. You can pick currency pairs if you want, and I'm happy to go through it.
Even. 79 half
If you want me to
bid
do
at 0 even.
oil, let's look at oil. Just you let me know, okay? You're the boss.
9 even, 9 half. 79 even, 79 half. 9 even, 9 half at 9 even, 8 half bid at 9. 9 even, 9 half. 9 half bid. 9 half bid at 0.
Here, I'll show you the guys that we're listening to. Oh, looks like we lost our sound feed. Oh, I don't have them on this one.
0 even, 0 half.
But this is the view that they actually have.
0 even at 0 even, 79 half bid at 0.
This is actually the Trade the News desk. And they're looking down into this pit here.
Right now. 9 half bid at 0.
That's
I
the
don't wanna
S&P
do anything right
500.
now. 9 half bid at 0.
This is the 10-year
No,
T-note.
9 half bid at 0. I'm out. 9
So
half bid
these
at 0.
hand signals, this is what they're reading.
0 even, 0 half.
You see up here, there's desks up high.
80 even, 80 half. 0 even, 0 half.
That's people
80
sitting,
even,
right?
80 half. 0 even, 0 half.
So you can send runners down to the pit if you want. If you're a broker and
even oh
you
half.
get a big order from a client, you can run it
79
down
half bid at 0.
to your guy in the pit, and the pit guy comes in and he buys and
79
sells
half
with
bid at
hand
0 even,
signals.
9 half bid at 0. 79 half bid at 0 even, 9 half bid at 0.
I think your hands facing into the pit means you're selling.
79
Palm
half bid
facing
at
your
0 even,
face
9
means
half
you're
bid at 0.
buying. But, you know, I'm not a pit trader. But I
80
was there.
80 even bid high, 78 half low.
There it's me. See this guy? He's buying, right? He's taking.
At 80 even, 79 half bid at 0. 79 half bid at 0 even. 0 even bid, 0 even, 0 half. 80 even, 80 half. 0 even, 0 half.
Okay, Euro USD? Sure, Gino?
At 0 even, 0 even, 0 half.
Oh, Kevin says, can you explain the price difference between the floor traders and the traders' way? Yeah. So in Trader's Way, we're using a cash position.
Oh, even a half.
What do you think the pit is trading?
80 even, 80 half. Oh, even oh, half.
S&P 500 futures. So there's a spread or a price difference between the futures contract and the cash position. There's also a spread between the front month, right? Let's say the December contract, because I'm sure they're on the December, right? So they're trading the DEES, the December futures contract. But there's another contract when December expires, they're going to roll over to a different contract. Well, each of those futures contracts, because you can trade multiple different months, and you can trade the spread between the two, whether they're converging or diverging. You could trade those. They have different prices because of carrying costs and risks and other things, right? And then just next to this pit, just to the left, is the options pit.
78 half.
Okay, and then over here is the 10-year T-note, and over here is something else. Around the corner, there's a whole nother room like this. Like when you walk onto the floor of the Chicago Board of Trade, the first thing you walk into is the soybean meal futures pit. I'm like, oh my God, I'm standing in the soybean meal futures pit. This is awesome. Right? And they're all different, which is really interesting. But in this case, there's a difference between the front month and the back month, and there's a difference in price. To the left, you have options on S&P 500 futures. And like I said, you could trade multiple months, and you could trade rollover from one month to another. You could trade the spread between different futures contracts, one month over another. And it gets very complicated, especially on times like quadruple witching week, you might have heard of. That's when options and futures and anything that can expire will expire, and that can change things because of rollover. And holy man, it can get complicated, right? Especially if you don't know any of it's happening. You're like, why am I losing money? You're like, well, your contract's expiring. You should be rolling over to the next month. You're like, I don't even know what you're talking about. So this cash market, it never expires. It's not a futures contract. Okay, which is good. So you could, let's say, buy the S&P 500 on this cash position and never be required to roll it over because it will never expire.
8 half bit at 8 half.
Isn't that cool? So that's why their price is slightly different.
At 8 even, 7 half bit at 8.
So 8 even.
7 half, 8 even.
7 half, 8 even. Okay, they're reading
770 trade local to local.
Like let me
8 even, 8 half.
Let me turn them off for a second. I would be saying 2-1, 2-4, 3-4, 2-1, 3-4, 2-1, 3-4 is what I'd be saying. And that's the bid-ask spread right now in the S&P 500 cash market, right? And they're doing 2.5, 280, right? So that would be 2.5, 2.8, that kind of thing. Remember, they're trading large institutional-sized contracts and stuff. Like I said, the guy yesterday just within 15 seconds bought $40 million worth of the S&P 500. Their spreads are pretty low, man. So that's why ours is slightly different. But I'm listening to that more as of a sentiment. So very often what they'll tell us is how many people are in the pit. They'll say, pit population's light today, maybe 60%. Well, I know there's not many traders showing up today. And who didn't show up? Did Goldman Sachs take the day off? Well, that might be interesting, right? And then I like to listen to the open. I mean, I've heard days where they're freaking out at the open. Like, you're like, wow, it's the end of the world, right? Well, wouldn't that be good to know if you're sitting here staring at your chart? And wouldn't it be good to hear the panic? And because you can actually hear the voices of them screaming, everyone trying to get out. Or what about a feeding frenzy where everyone's trying to get in? Buy. Goldman buys 80. Oh, he buys 2 more. That's 100 cars. Oh, he buys. And you're like, holy crap. Right? They're buying billions of dollars worth of this in seconds, and we can hear them. You're like, wow, that might be interesting sentiment-wise, whether, you know, I should really be strong the dollar or be weak the dollar or confident in my position or not. So to me, it's just sort of a sentiment index, and it's kind of an interesting thing to look forward to as well. I mean, it's a big time in the day. You'll notice that the U.S. stock market open is usually a very significant point in the trading day. And as we know as currency traders, if people are trying to get in or out of the U.S. stock market, let's say get out, let's say it's a horrible day, and foreigners are panicking and they're trying to get their money out of the S&P 500, well, very often they bring that money home, don't they? What does that do to the United States dollar? And I mean in real time. The dollar weakens. Because they're cashing out of the stock market. Now they have these dollars, but they don't want the dollars. They want the money back in their home country, right? So suddenly they're flooding the world, right? Because it's a global thing. They're flooding the world with United States dollars. Because they're getting out of their risky positions and they're bringing their money back home where it's safe. And you'll see it. Yeah, you'll see it in real time, man. It's pretty amazing. Okay, kicking off the open price here. Pretty interesting, huh? 2080. I remember that being resistance at one point. I remember talking about 2080. Cool. I still would like to buy it more like 2070. What do you think? Oh no, I'm such a dweeb. I'm just a sucker with no self-esteem. Oh, way, oh. Way, oh, way, oh. Thank you, Jesus. Is anybody running into I don't know, me for the first time? You're like, who's this Wayne guy? He's nuts. Anybody new? I don't know. Hey, you know, we're on YouTube right now. If you type in Forex, you can see Lawrence in the room, Lawrence Williams. He's on the first page if you type in Forex on YouTube. He has a video. How'd you do that, Lawrence? Second day for you, Jesus? Right on. You have first week for Gino? Cool. Yeah, I don't know. Lawrence is a genius, man. I don't know how he did that. I like his. I've seen his chart setups and stuff. I know Larry. Good looks. It's all good looks. Hey, would you be willing to put a link to like the Forex.Today channel or something in that video description? Just say, hey, you can catch me here most days. If someone watches your video, just say, hey, man, I'm around here. That'd be cool. You don't have to, but that would be cool. I don't know how you get a video on the first page like that. You did a good job. Probably honesty goes a long ways, right? Gino wants to know, all right, so you need to know how to front run. The best part of front running, or the best way to front run, is you pick your direction that you want to do, you want to trade. Let's say you're a bull in the S&P 500. About a half an hour before it opens, if you're going to front run it, you should look for support, and ideally you get some sort of entries. Okay, so let's go back to the S&P 500. Where is it on this chart? Over here. All right, so let's say you look at the S&P 500, I don't know, an hour ago. Oh, maybe, yeah, about an hour ago at 8:44 in the morning. And you say, all right, well, I'm a bull. I would like to buy, and I would like to buy before the stock market opens, because if there are other buyers that come in after the market opens, especially if there's a feeding frenzy, that new money coming in is going to carry your trade into profit. Would you agree to that? If you simply get direction right, when the market opens, there's going to be a flood of money, and if you get it right, you're sort of riding a wave of new money. Because, why is the new money coming into the market? I mean, that's the basic question, right? You're not going to move the market. Your trading account's not that big, right? So you got to get in before the big money so that they carry the market. So when are they going to come in? Well, how about at the equity open? That's an event-driven strategy. So let's get you in before the event. This is why to lower your risk, you want to trade in the direction of your fundamental bias. Some can just trade, here's another way if you don't want to do that. You take the cross, a 5-minute Stokes cross, before the market opens, and you just say sell. This isn't obviously a good one. There isn't actually, and if you want to do a dumb version, there isn't even a good example of a dumb version. But you pick your direction, make your lines, take your shot, and you have a pretty close stop. Like, let's say you're doing Euro USD. One thing that I often do is like a 2040 OCO. Okay? Now remember, if you're wrong 66% of the time, how much money do you lose with that risk-reward ratio? Well, Gino, we're talking about a scalp. You're going to get chopped up. Right, you're going to get chopped up in the noise if you're waiting to make a decision after. You're going to get a sucker's bet. Okay, so look, if you're wrong 66% of the time, but your risk-reward ratio set profitably or properly, you don't lose any money. Now, you're not going to really, in the long run, you're not going to make a lot of money either because you're only talking 40 pips. But let's say, if you can get it the other way around, 66% of the time you're making money, okay, and your winners are twice the size of your losers, but 2/3 of the time they're winners, now you're making significantly more pips, right? And that's what you want to get yourself into, especially on trends. There are periods like 10-day stretches that you can get 10 in a row on the S&P 500. It happens because it trends. It's supposed to trend, especially if you're only going, so if you're in a downtrend, most days you're selling, and then once it reverses, and you're only buying on those days. So, and all that kind of stuff. Yeah, right. So that means 33% of the time, if you lose, you're still going to break even on the win because the winners pay for the losers, and so the question is, over time, can you get better than losing 66% of the time? Could you at least get to 50-50? Well, if you get to 50-50, you're going to make money. So it's just an event-driven strategy. It's just a scalp. It's not a big deal. Okay? So let's pick something else. What would be an interesting one? USD CAD, maybe pound. We'll do pound. I haven't opened up pound in a while. Okay, so ideally you have a fundamental bias or at least a longer-term technical bias. You should be able to open up at least an hourly chart or a 4-hour chart and say to yourself, is this trending up or is this trending down? You could do that for me, right? Even if you don't know anything about fundamentals or macroeconomics or central banking policy and all that kind of stuff, if you don't know anything about that, that's fine. But you can open up a 4-hour chart and say it's trending up or trending down, right? So you start with that, and ideally you only trade in the direction of the trend, because you're going to get lucky more often than unlucky, because the trend is going to make up for a lot of mistakes. Even if your entry's poor, you still might make money, right?
10 minutes at the top there, we'll get the October leading index. Expected 0.5%, prior was minus 0.2%.
Let's get a cleaner chart. All right, let's do, I guess we'll do this one, and I'll make it, go to a 5-minute. Okay, so if you were a bull on this, for example, going into the stock market equity open, you might want to look for an opportunity to get long, knowing that the equity open is coming up. So it was 20 minutes ago. That's 4 candles ago, right? So this is the current candle, 1, 2, 3, 4. So let's just say, this is the open. I don't know, one of these is the open, right? All right, so, but let's say you're down sort of in here. Okay? And you say to yourself, I want to buy because you believe this turned bullish. It's dropped down, made a 50% retracement off of a daily pivot, and is, not falling any further. So you could say to yourself, well, I'd like to get long, especially maybe after a bullish engulfing candle. You wait for that fib, and you buy it here on the crossover. And you say to yourself, you know what, we're only like a half an hour away from the equity open. I think I'm just going to front run this. I'm just going to hold it. And if things continue, this wave is going to take me up to the next level. Okay, this will propel us to maybe 53.20. If you get it wrong, it's just going to come down and knock you out at break even, and you're like, oh well. But it's sort of a mindset that that this new money is going to enter the market, and you have the ability to move your stop to break even, and you're just like hero or zero it is one way of saying it, right? Okay. Pinko, I don't want to talk about Swiss franc. I haven't recovered emotionally from that. So, so let's say it does this. You say, okay, I want to buy it. So you're going to buy the pullback. You get the pullback, beautiful little 50% into the moving averages. So, with your spread, you're kind of in here. And the stock market opens, you're up high, you jam your stop, and you're done. Okay? And what you do is you set now your limit 50 pips above, so you're in at 70. All right? So your target's 20, like I already said. So you're going for the daily R3. This is only a 5-minute chart, so I wouldn't freak out about it. And your stop's at break even. You're either going to not lose money, but if things continue and go well for you, you'll make 50 pips. And it's an attitude, it's a strategy that you're doing just before, like a half an hour or so before the stock market open. You could say, you know what, this is cool. If I get this right, that new money is going to come in and drive this up, and I'm going to get paid. Okay? Sometimes it's more obvious than this, and it's just worth a shot. Okay? If you're a bear, you probably didn't get your setup until now, and as a bear, you're probably looking to swing this to the downside, and it wouldn't be an equity open scalp anyways. All right? It would be a whole different idea. But for a bull on this, sure, eh? All right, did anyone buy the Aussie dollar on the hourly 21? Let's go look at that. No, you should enter. I wouldn't say, okay, you enter if you get a setup. Okay, Gino? If you get a setup ideally one that you want to be in, not just because of the equity open, but you want to be along anyways. And it's about a half an hour until that news. You get in the trade, and then right before the news, before the stock market opens, move your stop either closer to break even or at break even, so you're risking almost nothing or actually nothing. And you go into the equity open hero or zero. And the new money flow and volatility either benefits you or hurts you none. Just a scalp. It's not a big deal. It's not going to make you filthy stinking rich. I did a video actually 2 weeks ago. It's on YouTube about how to get filthy stinking rich trading Forex. I don't know if you've seen that one. It's on the YouTube channel. You watch that one, and I'm dead serious. That's how I talk about how to do that properly. Scalping, the equity open is just a dog and pony show. All right, where's my mouse? Too many screens. All right, Aussie yen. Oh ho, way-ho, way-oh, oh oh. All right, can you see that? Maybe I'll use my drawing tool. Oh, what did I do? I clicked the wrong button. I hate when I click the wrong button. Hang on, I gotta shut something down. You want to delete? Yes. Suppose I gotta get my drawing tool back. Hang on. Un momento, por favor. Muy bien. I'm clicking all kinds of wrong buttons. I just turned the news off right before the news comes out. Hang on, let me get that going. Trade the news. Clearly I can't talk and do anything else at the same time. All right, so got the news back up. We're about 3 minutes away from the news. Leading indicators. And then, oh, my drawing tool. Okay, I got that back. And we'll just go from here. I don't want to touch it. All right. What I wanted to do is, you see this wick? Drag it across. Boom! That resistance could act as support now. And the idea is if you're a bull on Aussie yen, pa-chow, could be really nice. The more you suffer, the more you know you really care. Yeah. Yeah. Messy chart. I guess it's chart properties I got to change that on. You know what? I'm just going to clean this up a different way. Line graph, black graph, cancel. Template. Okay, so now looking at sort of a closer view. Oh man, it's already taken off on us, huh? All right, this is pretty cool.
Just under a minute to October
now
leading
watch
index
this when I
data
change
for
it
the
to the
US
hourly.
expected 0.5%. Prior was 0.2%.
Right off that 21. That is a nice trade, yo. Shoot, we missed it by just the last few minutes, huh? Yeah, sometimes it's the trouble doing webinars. I miss things. Shoot, that's a nice trade. Oh, no. That's a nice trade, guys. See, bounced right off the obvious support, bounced off the rolled reversal, bounced off the pivot, makes a higher high relative to the previous side, drops 3. Oh,
the October leading index in just a few seconds.
Easy. Oh, man. All right, well, here we go.
So waiting the leading index data. 0.6%, 1/10 higher than expected for leading index.
Cool. Well, there's amazing news there. 0.6 versus 0.5 expected. Holy smokes. Now, where does this number come from? You guys ever wonder? You ever like Google that? Do you actually start to read the data reports yourself? Or is that too crazy? So let me show you. That's it. This is what was just reported. You can download the PDF if you want. This just became available, 30 seconds ago. The Conference Board Leading Economic Index for the United States increased 0.6% in October. Right? Blah, 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 blah. Blah, 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 blah. Read, read, read. Read, read, read. The 10 components of the leading economic index include average weekly hours for manufacturing, average weekly initial claims for unemployment insurance, manufacturers' new orders, consumer goods and materials, ISM index of new orders, blah, 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 blah. The numbers going up, that's a good thing for the U.S. economy.
Crude futures after retesting below $40 earlier this morning and now heading back in that direction. 40 spot 18.
Okay, so you could actually study this
Down
now as an
1.4%.
economist. Isn't this nice? This is now 1 minute old. It was just born. Isn't it lovely? You can actually start looking at the numbers and what they're actually looking at, and just beautiful stuff, huh? Cool. Now you're smart money. How does it feel to be smart money? Does it make you tingle a little bit? Here, I'll post a link to that PDF right here, and you can download it for yourself, eh? So with that, I'd like to thank you for this test. I hope it worked out really well. It's going to be available on the YouTube channel if you want to watch it again. And would you do me a favor? I want two things from you. I've been talking for hours and hours and hours today. I want to ask you for a couple of things. One, subscribe to the YouTube channel. I need 500 people subscribed so that I can get a custom URL, so I can just say go to youtube.com/ForexToday, right? So I need you to do that for me, and tell your friends to do it too if they're interested in Forex. And then two, would you please leave a comment? Leave a comment, do a share, give it a thumbs up, and maybe, just maybe, we'll do this again. But look, if you guys don't care, I don't need to do it again. So, right? So I need to know you care and it's worth my time. Otherwise, I can waste my time doing something else, like not missing that Aussie yen trade. Look at that. It's just free money. I totally missed that. Oh, tell me it's worth it. Okay, tell me it's worth it. So peace on earth. May the pips be with you. May our profits be above average. And thanks again for attending. Cheers.